Good morning, ladies and gentlemen. I'm Kritika, moderator for the conference call. Welcome to Brightcom Group Limited Investors Conference Call. The duration of the call will be for 1 hour. We have with us today Mr. Suresh Reddy and Mr. Fy22. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note this conference is recorded. Before we go ahead with the conference, Brightcom Group would like to mention that during the conference call, certain statements in this call reflecting Brightcom's future growth prospects are forward-looking statements, which involve a number of risks and uncertainties that could cause results to differ materially from those in such forward-looking statements. The company does not undertake to update any forward-looking statements that may be made from time to time by or on behalf of the company. Now, I hand over the floor to Mr. YSR, who will update us on the financial aspect of the call. Thank you, and over to you, sir.
Good morning, ma'am. Good morning, ladies and gentlemen. It is a pleasure to speak to you all again. I briefly give the summary of financial results for Q3 of financial year 21-22. The revenue for Q3 of financial year 21-22 was rupees 2,021 crores, registering a growth of 130% on year-on-year and 83.13% on quarter-on-quarter. The EBITDA for quarter 3 of financial year 21-22 was rupees 568.87 crores, registering a growth of 62.77% on quarter-on-quarter and 126.84% on year-on-year. The PAT for Q3 of financial year 21-22 was 371.44 crores, registering a growth of 167.99% on year-on-year and 75.09% on quarter. When you come to the revenue from digital marketing segment, the revenue for Q3 of financial year 21-22 was 1,928.94 crores, registering a growth of 90% on quarter-on-quarter and 142.23% on year-on-year. When you come to the profit before tax from digital marketing, it showed a growth of 74.69% on quarter-on-quarter and 168.4% on year-on-year. In absolute terms, the amount was 505 crores. Revenue from software segment for Q3 of financial year 21-22 was 92.89 crores. This is briefly the operating results of the company for the quarter ended 31st December 21. We have received some questions through mail regarding the receivables. I briefly explained. As on 31st to December 21, the total receivable across the globe is 2,095 crores, out of which 1,916 crores is from digital and 178 crores from the software segment. These receivables almost pertaining to the current quarter. The current quarter we achieved sales of 2,021 crores. 1,916 consists of mostly the current receivables, that is pertaining to the November and December. Okay, with this brief note, I will hand over the floor to Mr. Suresh Kumar Reddy, Chairman.
Thank you, YSR Garu. First of all, I'd like to welcome all the callers into the call today on a Saturday morning. I appreciate the tremendous interest and support that we've got from the stakeholders and shareholders. And I could sense the swelling of, the pride in YSR sir's, update just now. It's heartwarming to see that we've had the best quarter ever in the history of the company. So we are all very pumped up and kicked about how things have been going. While, we can easily take all the credit. So part of the credit obviously goes to the market conditions and how the world has changed. So with that, prelude, I think at initial conversation, I'd like to get into the details a little more on where the company did well, what actually happened, and why this run has been very good for the company. Just to give you some sense, if you look at year on year, one thing you have to keep in mind that the result, the business of digital marketing and digital advertising is a cyclical one. So we have, this is how it goes. Always the third quarter is the biggest quarter. I've said that in the past at the cost of repeating. So third quarter has always been the best quarter for the year, and same is the case here. While third quarter to third quarter, from last third quarter to this third quarter, it's a little more than double the business. And over the entire year, we probably do, almost, maybe double or little more than that is what our initial assumptions are. So, so it's a major shift. So in that sense, this financial year is a huge growth area for the company. So I'm happy to note that. So just to give you certain details here, we've already published this. We've added a number of new publishers. The number is 43 is actually, there was a question somebody had forwarded to us. He said, what is this 43? You have so many publishers. So when we have two sets of publishers, ones who actually come on to our automated system and become publishers and get access to our automated, of course, we do check their background, do all those things. And there are others where we have full service. So this 43 new publishers are more the full service type of publishers. We will have a little more detailed presentation with some names also in it. At this point, I just want to leave it at numbers. We added, already we crossed 200 ad agency relationships globally. There are, another 12 new ad agency relationships that came on board this quarter. And we added, 10 new direct advertisers. So these are some of the, just to give you some sense of things that contributed to do slightly better than guidance, or these are some of the reasons. The guidance was based on as is was is, but these were some new things that came on board. And other things to note, we, in spite of all the busy schedule of third quarter, which is always the case every year, we had the time to launch a new product. We launched Brightcom video player, which is clearly, very early to say much about, what are the revenues and what are the profitability and things like that. But I can clearly say there's a huge traction. Every place our clients are testing it, they're finding it very useful and interesting. So we're gradually, percolating into our own publisher network to start using it. Just to give you an example why this is important. Let's say you have a static page that people visit, and then you run some banner ads, and then you have, a button ads and stuff like that on a regular web page. With this, you could, let's say it's an entertainment channel, or somebody's talking about, a new movie or something like that. With adding this as part of it, they could run a trailer of the movie right there. And then, some ads can be embedded in that. So it makes the page, which is normally a static page, and suddenly become more dynamic. And in fact, it adds to the content in a different way. So so this is a nice addition, I believe. In terms of numbers, we'll only start to see more clarity on how this will play out, because there are some large players in the marketplace. Whether it is a JW player or VLC player or Elite or Afterglow, there are some good players in the marketplace. What we are trying to leverage is our relationships and our ability to monetize. They are pure play players, but we actually bring in advertisements along with the player. So hence, I'll stop at that. I don't want to get more technical on that, but it's an exciting new product, and we are waiting and watching how it plays out. And I have talked in the past about our Be Local exchange. We continue to add more newspaper relationships. I think number was 14 this quarter. Then in terms of another interesting thing, again, due to additional large publishers we added, and holiday season itself, and a lot more places that we are able to service. Typically, we used to do about 30 million impressions. Maybe in the beginning of the year, it started to go up to 60, 70 as we came to the middle of the year. But in December, we touched 90 million impressions. I think people spend more time browsing, searching, and usually, why I also want to add another point. This quarter is always the best in the advertising space, not just digital. Is because in the Western world, that is when Christmas and a lot of gifting-based festivals show up, whether it's Christmas, Thanksgiving, Hanukkah, and such. So there's a lot of activity related to purchases, and because of the COVID and because of whatever, people are more comfortable now. They don't have to walk into a store. They're able to directly browse, check out, and so that some of that action is going on in December, and some last-minute buys and such. So there is that's something to report back to all of you, is that we touched the 90 billion, and we'll also let you know when we hit 100 billion impressions a month, and I hope to see that fairly soon. Let's see how that plays out. That is a general report in terms of the numbers. And other point that we also want to bring forth is we added Mr. Satish Chiti to strengthen the management team. He comes in as a president and head of the new digital audio division, Brightcom Audio. He's already starting to look into how the whole thing is working out, and he's in fact negotiating a letter of intent for the company, which we have talked about. And so between him, Brad, and me, we are working on this new digital audio acquisition LOI, and we will let you know as soon as that is signed, and it's going very well. Other things, coming to more on the numbers itself, I had set the target to ourselves of having a free cash flow of 250 crores by end of March, and another 250 crores by end of the next quarter, June. So almost 500 crores of free cash flow. There were questions on how we'll use the free cash flow, and are we still on track and things of nature. We are definitely on track. How we'll use, we will talk about it as things, unfold. It's hard to tell you right now, but we have some plans. Let's see how that plays out. And more importantly, it's absolutely on track towards that. And I want to give you the core reason why we are very gung-ho and we are very clear that this will happen. Generally, in the industry, when you are in the 350-400 million revenue range, there is a product development cost, and there are other costs that go into running a tech business like ours. And mostly in the ad tech business, there is free cash flow gets tighter because you have to do significant investments into new products. And the moment it crosses the 500 million mark, suddenly free cash flow start to open up. And which is why we predicted this when we made our guidance. And so, already, you've seen the numbers of, it's definitely looking like we clearly crossed a 500 million mark annual revenue. So it's all, it's because we know our margins, we know our fixed costs, we know our product development costs. So all that are clear. This is where it starts to get into the zone where, company starts to accumulate free cash. So that's broadly some of the points I wanted to make. Then in terms of other things that actually helped the revenue growth is, of course, like I said, the industry itself is shifting. And why is the industry having this kind of a huge growth in revenue? It's partly because there's one big thing that we saw is the online sales compared to pre-pandemic period like 2019 is almost 60% up. That's phenomenal compared to ever before in a couple of years time frame. So what is happening is now the manufacturers, the retailers, the wholesalers, all these different parts of the ecosystem have clearly started to spend more money and resources towards strengthening their online presence and having easier ways for people to evaluate and make purchases and conduct commerce. So that is a massive contributor, not just to them, but to the ecosystem. So I would give that the highest driver in terms of why we are seeing this kind of growth. Of course, there are a lot of, we have also as a company focused on trying to filter out all this, bot or spurious traffic that comes through. And it's industry is reaching a stable state, and we are able to, as a group of players in the industry, were able to cut down on the traffic, on the fraudulent traffic that's coming through is all getting cut out. So whatever is coming through are real people, and hence whether they respond or not is a real person's choice. And since more commerce is happening online, so more is getting sold, and hence the CPM costs are getting better. So we are able to ask for better CPMs because our advertisers are getting better results. So the effective CPMs have gone up. This is broadly some of the things. Okay, another update, obviously, we've already made an update, which is we've signed the definitive agreement with MediaMint. And what's going on that front is we are waiting for, there is a cash component and then there is a stock component. So we have actually got the shareholder approval. We applied to exchanges. We should get the exchange approval day or two. I think it's looking like it's almost done, but we're waiting to hear from them. And once it is done, we will make that allocation of 1.4 crore shares. It's a small amount of shares, but that's the stock portion of the acquisition. And then the cash component that has come through our FPI investments and the preferential issues all has come in. So there are a few things, formalities we have to finish. Once that is all done and we get the board approval that it's all clear and done, then we will go ahead and close that deal. So that's the status on the MediaMint acquisition. Other points, the general updates. We've already updated you that we are one of the select group who were selected as the multi-channel partners for Google, MCM partners as it is said. So that is also adding, in fact, that is another huge driver where we got a lot of new publishers, new quality, higher quality traffic flowing through our network. Other than that, a couple of things that I wanted to update is our team was at the DigiDay Publishing Strategies conference, met a lot of publishers, and again, that is an ongoing journey where we keep adding publishers on one side and adding advertisers on the other side, and we enhance the network. And then in terms of education, our director of inventory quality, Joel, had a nice webinar. I think we published that on Twitter, and there was very good response we got from that. And happy to report that it got great feedback, and the customer, the credibility with the customer. So that has been really good. Beyond that, of course, now there is a concept called pre-bid, which is considered like a single unifying solution for all publishers and supply side platforms. It's an industry initiative, and we are very major partner in that, and we are proud to be a pre-bid member. So that is something I'd like to report to you. Beyond that, general outlook for the industry itself. Like I said, there's a huge shift, and this is going to continue. And the sector itself, the outlook for the sector itself is very robust. And other things that I had mentioned last time, it's interesting developments have happened since about metaverse and how things are changing the landscape, especially from the social and the AR/VR merger perspective, you must have read about Microsoft making one of the largest acquisitions. It is the largest. They paid about $69 billion to make an acquisition in a gaming company. That's fundamental core there. Behind that acquisition is this metaverse and people participating together on a digital platform. So we are watching this closely, and hopefully we'll have a better update on that. And we would like to be part of that ecosystem, advertising. And in fact, there is a lot of real estate. There is a recent article on this real estate being bought and sold on metaverse as well. So it's very interesting stuff that is happening there. So it's broadly what my update is for today. And I'm happy to take. And let me go through this. Yeah, before I go through, there are already some questions that came through. I'll try and answer them so that I've addressed most of the questions. I'll just walk through them. Give me a second. There's a question regarding typical contract period we have with publishers. How many or how much percentage of these publishers have signed up for next year? So usually it's a 1-year contract and automatic renewal. All of them have signed contract for 1 year. And then they keep getting automatically renewed unless we have 2 types of contracts, basically insertion order and purchase order. So both are on 2 sides of the equation that we work with. One is with publishers, other is with advertisers. And we basically discuss on how much traffic and how much will we pay or get paid for the traffic flowing through, and nature of targeting that would go into it. These are some of the components of this contract. I hope I've answered the question on that. And then coming to a number of publishers added this quarter, I think I talked about that. There is, they said the same thing. Brightcom player, I did talk, I think I covered all of that there. Cash flows, what is the percentage of profit to FCF ratio can we expect in coming quarters? I'm doing a presentation that I will put out over the next week or so. We'll have some of those as part of that. So I don't have it top of my head. We'll put that out in that presentation. Then you were talking about, and the question is regarding accounting policy being reviewed, similar in line with large global companies. Yes, that review is very much in line. We were planning to implement some of that this quarter. But, again, we were just ensuring that all global practices are taken into account and such. So we will have an update on that in the next month or so. So we're having some specialists review some of the policies that we think should be. And that should come out soon. And talking about auditors, yes, we have our auditor, who's India-based. And we do have local auditors in various countries. And like we have mentioned in the past, Big Four auditors, we have in Israel. Other places are fairly large auditors. Big Four is almost 40 to 50% of our business goes through the Big Four auditor in Israel. Coming to EBITDA margin, the question is it's been around 31% to 28% in December quarter. Can we expect these margins to remain? Yes, very much they'll remain. Definitely, we've always been, they've fluctuated over the years depending on speed of execution, flow of business, a lot of things matter. And when there is a frenzy of business, sometimes we do compromise a bit, about a couple of percent here, there to make sure that we get the market share. So I don't see that dropping. I see that getting enhanced as we go because the fixed costs start to also, top off. So I'm expecting that to stay at this level, slightly healthier. On the MediaMint acquisition, there are a bunch of questions. How do you plan to, integrate this company, I think is the question. Basically, it will media. So we believe in retaining the brand. We believe in having the brand get all the business that's getting. We are only more a facilitator. So Media Mint will be a Brightcom brand for sure. Will it operate as a separate subsidiary or part of the India unit? Good question. First 6 months, it will operate as legally a separate entity, after which we will review and see how things will take. But in terms of a brand and the business division, it will continue to operate separately. Will it get consolidated? Will it become part of the standalone? That is what we are looking at. So that's what will happen maybe after 6 months. Then status of the audio ad tech company, I think I've talked about it. Then future, yes, this is another interesting question. Ad tech is projected to grow at greater than 20%, CAGR for the next 5 years. I think it will be even greater, but that said, would you expect BCG to grow above these numbers? Of course, that's the play, right? You have to be more efficient. That's when you start moving into the leadership position. So it's very important for us to have, which is why I keep emphasizing on free cash flow and ROE that we would like to monitor to basically improve and take more business and have more efficient business running. So which is all going to help get a larger piece of that pie. So definitely we can expect better growth than that. Then there is, yes, do you see any impact of the post-pandemic Fed rate hike? That's more on a question to an economist. But that said, I don't see much. We are not seeing much, I can say that when we talk to our clients, not much of an issue there saying, oh, wow, it's going to reduce our spending or anything of that nature. Whatever we are seeing is cyclical because there's been a lot of spending during the October to December quarter. There will be a little cooling period in this quarter. And then it goes on. So it's the same thing that goes on year on year. So it's nothing to do with this. But, definitely we are watching how it's impacting. That's basically all I can say. In terms of strategy, yes, AI, ML, what is the plan? And IoT, what is the plan? It is being worked upon. Still in terms of strategically getting involved and making things happen, take it to the next level, you can expect second to third quarter of next financial year. So we will start making moves in that direction, start trying to grow that more. Till that, it is organic, and it has been, it has not been bad. It has not been phenomenal because it didn't catch on fire on its own. It does require intervention from a strategic direction, so which is what we will look at that point. Then comes our updates on partnerships with Amazon, Meta, LinkedIn. We continue to have the relationships with large players like Facebook, Meta, LinkedIn, Amazon. It's ongoing, and we are always trying to see which direction the client is trying to head, and we will always try to make sure that we are there to service them and to help them. There's a question about Media Mint working in AR, VR related projects and how that would blend into Metaverse. Yes, we will take that definitely into account. That's something that we've been discussing. Then, yes, there's gaming companies like Nazara has entered ad tech space. Do we see any possibility of BCG entering into gaming space, either as an ad tech player or as a gaming publisher? Definitely not as a gaming publisher. Just to jog your memory back, the Lycos brand we used to have, one of the largest gaming brands. We have actually moved on, and we don't believe that. It's like, in my mind, making a game is like making a movie, and it's a content game. We are more a platform company and a tech company and a company that's focused on performance, which are measurable. Content is a different ball game, which is not our strength. So we will never get into making games or becoming a gaming publisher. We will work with existing gaming publishers. We'll definitely help them monetize better then they can do on their own. So that is clear on that front. Then there's a question, do you plan to do a startup fund through this company? We don't have any such plans at this point. We see opportunity to grow the business of Brightcom. We will make investments there. But in all our acquisitions have been 100%. We did do a few, 49% type of. So it won't be like a VC funding approach ever. So that is ongoing. Other questions regarding industry, I think there is how is first-party cookies versus third-party cookies being phased out, and what are we doing? Yes, we have partners here, and we do see that the first-party cookie and having partnerships with the right people is going to help us put in a better place in terms of the business itself. Then there's the question about how OTT platforms like Netflix, Disney, and others may start advertising on their platforms. We hope they will. So that will work in our favor. That's all I can say on that. Then, question regarding some specific executives, I'll leave that for now. So that's all I had. I will open up for questions and then take it from there.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 1 again. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. First question comes from Patrick from Connectivity Solution. Please go ahead.
Good morning to all of you. Awesome performance in Q3, and I would like to thank the entire team by Brightcom. We have definitely set the bar high, and our expectations also have gone up with that. So I have two questions. Question number one is, what are our plans to sustain and consistently achieve such growth rate and increase cash flow further? And related to this question is, given our dilution level, how do we balance our performance matrix of EPS, ROE, PEGR, etc.? I have a second question. I will come to that later.
Yeah, thanks for calling in, Patrick. And let me come. Thanks again for the compliments. Coming to what are the plans to sustain the business at this level and how to actually grow at the same level. Yes, this quarter has been abnormally high. So obviously, don't expect me to repeat this quarter again to do that kind of growth rate on a quarter-on-quarter basis. But I can tell you a few things, and that is where in my outlook part I talked about it. I don't have to do a whole lot other than stay efficient and stay centered on where we are good at, because the adoption of digital and people moving over and making digital as their choicest way of buying things is just happening at a very rapid rate, and there are so many people still gradually moving through their mobile phones or through their laptops, tablets, and starting to see this as an option. Few things that are really catching fire is social commerce, for example, is another area that has come to our notice. You're looking at how that's catching on, especially in China. It has been very rapid. So you can see how your friends are buying, and then you can actually follow a few people and get ideas on how to buy. I think that is a very interesting way to make people participate in buying. So a lot of things like that are happening, and so these are all smart industry ideas that are working. And given this quick spike or catalyst that has happened called COVID-19. While it has had all the difficulties, this is one positive effect it has had. There is no going back. This size, this kind of traffic across the different players in the industry has come to stay. So I'm not concerned that, oh man, this is not going to sustain or it's going to go down at all. And if you look at future, we expect the growth rates, like somebody mentioned in one of the questions, is it to maintain at least at 20% or more year on year as an industry. And we would work on, first of all, through acquisitions, through cash that comes in, and through other means to actually inorganically add so that we become a larger, significant player in the ecosystem. So that is our endeavor. So there the revenues are not just organic growth, that is inorganic growth. So to sustain that, we have taken the first step of bringing in Media Mint so that we have the back end and we have the basic skeleton to add on the muscle to it. So that is where our mind is right now. So we are very, very gung-ho about the future. And I hope that answers your question, Patrick, on the first question.
Yeah, if you can hear me, the second question was in fact related to the point that you are making. So maybe I will put in that question and it will help you to answer the first as well as second. And the second one was basically our acquisitions like Media Mint or maybe the futuristic acquisition of audio technology companies. How will we be able to create cross-leverage and accelerators on our core business by acquiring these companies? And hence, as a part of this entire strategy and vision, what can be our company's vision for the next 3 to 5 years in terms of, what we mean to customers or even what will be our size maybe 5 years down the line? Is there any thought process or vision around that?
Yes, very much. What we mean to our customers and how are we positioned, that's a different subject. I'll come to that. I'll answer your question directly. So the first point of, if we continue to, buy companies and add revenue and not grow organically, what you're saying is right. So we are looking at something that will bring synergy, that will complete our offering to our existing clients. So the clients are happier. They don't have to go to 2, 3, 4 places to get what they want. They can go to one place and we provide the full solution. So now the endeavor is to give them a more comprehensive full solution. Today we are seen as a digital agency, digital marketing group, whatever you want to call that, who is focused on ensuring the global traffic of U.S. companies are easily monetized. And so that is our strength. That is our strength as we are seen today. So that is how we have built. That is the positioning that has got us the revenues and the business so far. So we want to move from there, gradually go more, not just the global part, but become a significant player in terms of monetization, not just out of U.S., but including U.S. as well, having a comprehensive solution. So that is the positioning there and how we plan to go in there. Now, in terms of, what will happen to our EPS and what will happen to our, promoter holding and, dilution and things of that nature. See, to me, EPS is always directly proportionate. It's a number. Like EPS is proportional to number of shares. And so what is more important is PAT to value of the company, right? To the capital market cap or whatever you call it. That is the same ratio. That is more important. Now, whether you break it up into, so the multiple, which is the PE, comes from, market believing that we are a credible player and somebody who's got potential to become a large global force. That is the key. So whether I have 10 shares or 100 shares is irrelevant. It is more important, am I getting the right multiple? That if I hold one share at 100 rupees or one share at 200 rupees doesn't matter, as long as it's proportional, right? As long as I'm getting the right multiple on the company. So that is how I see it. It's a mathematical point. Now the third point is, how do we finance this? We have worked out some very creative ways, and we will talk more about it without doing too much dilution, how we can actually build the business, how we can actually finance our acquisitions, and be able to, with the additional cash flows, not impact the not impact further dilution in the company. I have mentioned that in the past. Another tool we are also looking at is diluting, because all our subsidiaries we own today are 100% held by the parent. So we are looking at one option there is not to dilute at the parent, maybe do some dilution at the next layer. So these are some of the strategies that we are adopting, and we will play it by the ear, make sure that we get the right value, and it will be based on how the deals will fall in place. I know it's a long answer to a short question. I can further go deeper if you want, Patrick.
No, at this stage, I think I'm fine with the answer. The question was also long. The answer was long. Thank you. Thank you for that. Yeah.
Thanks a lot. Thanks for your call.
Yeah. Good day.
Thank you, sir.
Good day.
Next question comes from Milind Malhotra, an individual investor. Please go ahead.
Hello.
Hello. Yes, Milindji. Please go ahead.
Hi, yes, sir. I have a couple of questions. First one being obviously metaverse. You talked about it already, but I just wanted to know a bit more on that. Like, how big is this opportunity, and how close we are to metaverse? Like, as they talk about it, like technology-wise, are we there, or still we are far from it? It's just that it's flavor of the discussion, but still technology is far from happening. And if it is close, then how large it can turn out to be for the AdTech industry as a whole and for us, and how are we aligning ourselves to capitalize on it, as we have always been ahead of curve, may it be programmatic advertising or video. So are we in fact even considering any strategic move on that front? And connecting to that, whether MediaMint's AR/VR section, is capable of technology-wise, to give us an initial push in that direction.
Okay, yeah, I think that question I answered partly. I'll try to get in deeper. So you'll have to bear with me, because this is going to be a slightly longer answer.
Sure.
We have kind of looked at it at a deeper level. So let's do a step back and see what exactly is a metaverse, right? Metaverse is, the textbook definition is a parallel universe in a digital world where you have your avatars go in and do things. Fine, okay, that has been there for a long time. Who was one of the earliest guys to do it? A player called Second Life, way back, almost now, I think 8-10 years ago. And that has been there, but it never really, the takeoff point has not been there till last year, till recently. Now, let me give you, pull back and think about it. The deeper essence of a metaverse is, it is an immersive experience. You have to bear with me here. Let's say you're watching a show, say House of Cards, or one of those, let's say, on Netflix. And then you think, okay, I'm going to watch one episode and I'll be done. You're watching, and then you suddenly say, wow, this is cool. Let me go, keep clicking, keep watching. And you do this binge watching for the next 7 hours. You don't even know that there is an outside universe. You have gone totally into your, into the Netflix world, into that world of House of Cards or whatever show you're watching. Now just imagine if you're also part of it inside. You're already inside mentally. Now if you can be one of the players in that, that is metaverse, nothing else. So it's an immersive experience that especially, and again, I keep coming back to people staying home, working from home, and being careful not going out and mingling with people has pushed this direction more. So people have started to spend more time. And the social media giants are seeing this as a massive opportunity to keep them there longer. So they may come up with, there are a lot of universes right now. I can tell you a few names on top of my head. Something like Active World, Anyland, Engage, Seek. There's a whole slew of them that are there. So just putting together the technology of putting together a metaverse or AR, VR, there are a lot of alternatives. Now, will that experience will be near reality? Will we get there? You might have watched a movie called Matrix, where people actually think that is real world. So that is where they're trying to take it right now. Can you get to that point? So that is the whole logic, and that's the technology that we don't get into. We are not into rendering and that business. So if I can run an ad today on Facebook, I can run an ad in their metaverse. For me, it makes no difference. There is no major upgrade in terms of technology. I just have to strategically align on what to sell, how to sell, where all to place. So the whole placement becomes not just one banner. I can go into somebody's world and start watching this guy, what he's trying to do. He's driving through various places. He's going to restaurants. Can I have an audio ad there? Can I have a music ad here? Can I have something? So these are some things that can be placed very strategically inside it. So that logic, and we will continue to stay in the advertising part where we specialize in. How to target, whom to target, which avatar to target becomes our next level. And I can go on and on, but this is broadly the way we are thinking. Are we going to use what Media Mint has and such? Those are all at the smaller level. And we are more on the strategic level. How can we actually become a significant player? We have to be. There is no choice. So if you have to be a significant advertising player, all the advertising agencies, networks today will have to be part of that world as well. If one is spending 6-7 hours inside it going forward, we don't know what that number is. That number is being thrown around. But so it becomes part of their life. When in the past you would see huge hoardings on the roads or TV watching because people were watching TV. Then they started getting into their laptop or their tablet and watch things or read stuff. The ads went in there. Now this is just another channel. It's an important channel. It's an evolving channel. So relationships are critical. Who are the players? Whom should we sign up? That becomes more a business and then a business problem to solve. And technically, for us, it's a flip of a switch. It is not at all hard. Yes, we'll have to make some changes because of format changes. It is simple for us to go from, online to mobile. We never made so much noise about it because just a flip of a switch. This is very similar in that sense. But we are watching, what I mentioned in my last call was, we are watching the development in this world and how we will have to be early in making sure we are part of that changing ecosystem. Does that answer your question, Milind? Sorry,
yes, definitely. No, definitely. Yeah, because opportunity appears quite big. Yes. Because if it turns out to be what it claims to be, it can be a very huge opportunity. Like as you said, people moving from non-digital things to digital gadgets and all. So advertising had to follow the users because they are spending more time online. So now if users are going to spend more time in metaverse, so obviously advertising may also shift.
We have to be part of that system.
Correct.
And what they buy sell in that world is different. They may buy clothes for their avatar. I don't know what they'll buy. Whatever they buy, we should be there. We should start working and being part of that. Correct. That's the idea.
Thanks. You answered pretty well. Yeah, thanks, sir. I do have a couple of questions more. It's about Media Mint. They have a blue chip clients like Netflix, Disney, Hulu, Pinterest, to mention few. What exactly is it that they do for these clients? Is it a services, backend support, or do they actually run campaigns for them?
They run campaigns for them. See, it's like, for example, Pinterest. I believe Pinterest alone has close to 100 people working in the Media Mint offices. So it's something like, they have, even if they, it's something that they've built that credibility with these large clients. So there is just an extension of their workplace. And these guys are in there, they are setting their campaigns, they understand their inside systems. They're part of that. And they have, knowingly or unknowingly specialized a lot in the OTT area, which I think is of great benefit to Brightcom. And those relationships can surely be leveraged. We'll take our time. We don't want to go and, rock the boat in any means. We give them time where they feel comfortable with the whole company and how we all operate. And we believe it takes 6 months You cannot just go in and walk in and start changing boards and scaring people. That's not at all the idea. So that's how we want to do it.
Okay. Are we exploring any other promising markets like, for AdTech, like China or maybe South Korea?
We are. I can't say anything more than that. Okay.
All right.
At this point, it's too early.
Okay. And there is like my questions are done. They're just like a request. We have like so many partnerships with these anti-fraud technology players in the market to provide the clean traffic and all. So can we have a presentation again, renewed presentation on that front? A lot of investors have joined in after lately. So if a presentation we can have on that front, sir.
Let me see what we can do on that. I'll take your point taken. I will see what we can do on that.
Thank you, sir. Thank you.
Definitely.
My question is done.
Thanks a lot.
Thank you, sir.
Can we go to the next caller?
Yes, sir. Next question comes from Sunil Khanna from Mattress Options. Please go ahead.
Hi, sir. Congratulations for the...
Thank you, sir. Thank you.
Great robust set of Q3 numbers. So I have three things to ask. One is with regard to bonus. So as a stakeholder, I know all of us are very delighted and happy for the second bonus which the company has declared. Can you let us share when is the record date? That is one thing. And considering the market cap of the company now, is there any possibility for our company Brightcom to enter into F&O space? And the third thing is with regard to overseas listing. By any means, is there a likely chance of Brightcom listing in Western exchanges? In what way the company and as a shareholder we get benefited?
Okay. Yeah. So I'll try and address that. Thank you first of all for coming on the call and
Welcome.
And for your question. Yeah. With regard to bonus record date, see, this is we cannot decide the record date today. How it works is after we announce in the board, right?
Okay.
After the board meeting, after it is announced, one is given 60 days to finish all formalities of completing the bonus. I cannot do anything related to bonus issuance after 60 days. If you do it, then entire thing goes for a toss. You cannot do it. So that is the law. And so that is number one. So in that period, I have to get shareholder approval and I have to get in principle approval or approvals from the exchanges. Once these two are done, then I have to implement and I have to set a record date. Then then we have to do a board meeting and set a record date. And then after the record date, whoever is on that record date will get a bonus. So there are a lot of questions that are coming. If I buy shares today, will I get bonus? Absolutely, you will get. You will get the bonus till the date of the record date, which is what you're pointing out. So the record date will be after we finish obviously the shareholder approval and parallelly process the exchange approval. Once these both are done, there would be a board meeting. We decide on the record date. The outer limit is surely 60 days. It cannot go beyond 60 days from the board meeting on which we announced this. So that is how it works. And I don't want to give you a record date today, and it doesn't make sense because some of these are not in our hands. Exchanges can take whatever time they take. Once it is done, we will do it. So if you want to get a ballpark number, it will be between, I would say, 40 days to 60 days from the date of announcement.
Okay.
In that ballpark, right? It's just logical. I think that's where it is.
Fine.
So then coming to market cap and F&O space, I think it's a natural evolution. There's not much we can do or not do. It's mostly how exchanges work with it. So we are focused on ensuring that we provide the results, focusing on articulating and communicating what we do to the market at large, updating the exchanges, updating stakeholders continuously, talking to funds, talking to larger players. So that is part of what we have to do. So which will hopefully convert into a market cap, which will put us into a market cap that will make us eligible for F&O and such. And it's nothing I can comment on, to be honest, right now. So right now it's difficult for us to comment on it. We are not opposed to being part of it, or we are not trying to be part of it. It's a natural evolution. So that is given. Overseas listing, we looked at it, we evaluated it, I think, a couple of years ago. We also, in fact, even tried to do a debt financing also overseas through this. But we felt, once we have to, some of the things that we learned from that experience was it's better to go there once your market cap is significant and you're getting the right multiple, and some of these things have to fall in place and stay stable for a bit before we start looking at these options. We do keep getting some of these inbound calls, but we are in not a huge hurry to go quickly list there. And if we do list, we will not list the parent, we will list at the subsidiary, which is what I was talking to the previous caller. I think Patrick had a question on that. So we will look at either an overseas listing or a private equity at that level, or a SPAC at that level. There are 100 ways to do that. So that is, and those tools are available. We are well aware of those tools. But the time has to be right. So we have to be rightly valued. We feel there is still room to get the right valuations and stay stable at certain level. Then these options will come. And in terms of what is good for the shareholder, as long as your investment is growing, whether it is India or overseas, I don't think as a shareholder we should worry about it. Because I'm also a shareholder. We should worry about our share price being rightly valued. That is more important.
Thanks, sir. Thank you so much.
That is the three ways I'm looking at it. Thank you very much.
Thank you so much.
Thank you, sir. Next question comes from Ian Bidden, an individual investor. Please go ahead. Ian Bidden, an individual investor. Please go ahead with your question.
Hello.
Hi, Ian. How are you?
I'm doing good. How are you, Suresh? Thanks.
Good. Please go ahead.
Congratulations on the great numbers. And I got a couple of questions here. Considering a free cash flow of, say 500 crores for this current financial year, and free cash flow of 250 crores in the first quarter of the next financial year, what would be a number you can throw for the whole free cash flow number you can throw for the next financial year?
We will get these guidances out later, Ian. I think we just want to, consolidate few things in February. We'll probably get the numbers out early March. We'll give guidance for next financial year and all the free cash flow projections and such. So just correction is 250 crores is by March and 500 crores is after the first quarter of next financial year.
Okay.
Small correction.
Yeah. Thanks for correcting me. And another question would be, we were talking about the line of credit until about a year ago. Actively talking. Are we still pursuing that?
We have put that on hold. Yeah. Like I just answered that to the previous caller. Whether it's an overseas listing or line of credit, all this we put on hold at this point because we just want to go into that space as a stronger entity with a larger market cap and more swag, if you may. So that's what we're trying to do.
Okay, because what I've observed is, given great numbers we've given this quarter, our receivables have also gone close to 2,000 crores.
Correct.
Right. Correct. So if you can use this as to raise some money or something, that was the reason for me asking this question.
Good question. Yeah, good question. We are considering that, but I think we'll stall a little more. And I think this will all get collected, and that's where either you collect it or you finance it. Better you collect, right? So we're trying to see how we can improve collection. And then whatever is left, we should start looking at how do we get a debt against that. So at this point, we'll probably do that, mid next year.
Thank you, sir. That
Thank
would
you.
be the last question for the day. Ladies and gentlemen, this concludes your conference call for today. Thank you for your participation and for using Lucifer's conference call service. You may disconnect your lines now. Thank you and have a pleasant day.